In the world of corporate insurance, where tradition and stability are prized above all else, controversy is a rare visitor. But now, that's changed. Chubb, one of the largest and most established names in the industry, is suddenly at the center of a national controversy that's making headlines across the country. A bold new ad campaign brands Chubb as the wokest insurance company in America, accusing it of prioritizing a political agenda over the needs of its customers and policyholders. The campaign claims Chubb's focus on diversity, equity, and inclusion, DEI, and environmental, social, and governance, ESG policies, is not just misguided, but actively harming American consumers and entire industries that rely on insurance. Critics argue that insurance companies should stick to assessing risk and protecting clients, not act as social engineers or push social change through corporate policy. This battle isn't just about Chubb. It's a fight over the future of American capitalism, and whether business should be a force for social change or simply focus on profit and service. Many now question whether trusted institutions are truly serving the public interest, or if they're more concerned with pleasing a distant elite and following the latest trends. The backlash against Chubb has struck a nerve, tapping into growing public distrust of big corporations and raising tough questions about the role of business in American society. Leading the charge is Consumers Research, America's oldest consumer protection group, now focused on fighting woke capitalism. Executive Director Will Hild accuses Chubb of betraying customers by embracing divisive ideologies. The group has taken formal action, alleging Chubb's DEI policies may violate federal anti-discrimination laws. Their campaign is direct naming names, calling out policies, and demanding accountability. This isn't their first battle. They've targeted other corporate giants for similar reasons. By challenging Chubb, Consumers Research signals that no company is too big to face public scrutiny. They're betting that consumers will reject the fusion of big business and progressive politics. At the heart of the ongoing controversy are Chubb's diversity, equity, and inclusion, DEI, and environmental, social, and governance, ESG initiatives, which have become central to the company's public image and internal policies. Critics argue these aren't just corporate buzzwords, they believe they're being used as tools to push what they call a radical social and political agenda, far beyond traditional business practices. Chubb's public anti-racism stance, along with its vocal support for organizations that some see as controversial, has only fueled the backlash and intensified the debate. Leadership statements describing DEI as the foundation of our culture are viewed by detractors as prioritizing identity and social issues over individual merit and business performance. On the energy front, Chubb has restricted insurance coverage for coal and fossil fuel companies, a move that critics label as a de facto boycott, one they argue could hurt American energy independence and jobs. CEO Evan Greenberg's outspoken opposition to nationalist policies and his support for globalism and international cooperation is cited by opponents as further evidence of a political agenda at play within the company. Detractors argue that Chubb is leveraging its corporate power to undermine U.S. interests, putting ideology ahead of the nation's economic and strategic priorities. For many, the company's actions are seen as more than just business decisions. They're political moves with the potential to shape national policy and impact the broader American landscape. Chubb would argue its policies are responsible, not radical. The company positions itself as a thoughtful leader, aiming to balance business interests with broader social responsibilities. In today's global market, DEI and ESG are often seen as good governance and risk management. These frameworks are increasingly expected by investors, regulators, and clients who demand accountability and transparency from major corporations. Promoting diversity helps attract talent and drive innovation, creating a workplace where different perspectives fuel creative solutions and better decision-making. Meanwhile, limiting fossil fuel exposure is a financial decision for an insurer facing climate risks, as environmental disasters can lead to significant losses and threaten long-term profitability. Chubb's leadership supports global trade, arguing that international cooperation benefits business and stability. They believe open markets and cross-border partnerships are essential for growth in a connected world. Critics see this as a clash of worldviews, globalist versus nationalist. Some argue Chubb's approach undermines local priorities, while others see it as forward-thinking. Notably, Chubb has stayed silent amid the backlash, refusing to comment publicly or clarify its stance. This silence is either strategic or a sign of weakness, depending on your perspective. Some see it as a calculated move to avoid fueling controversy. By not responding, Chubb lets critics define the debate, leaving its true intentions open to interpretation and ongoing speculation. This isn't just about a Swiss insurance giant, it affects every American. When Chubb stops insuring energy sectors, it can raise prices, cost jobs, and increase reliance on foreign energy. DEI programs, if seen as quotas, can spark backlash and questions about fairness. The debate is about what kind of society we want, merit-based or identity-driven. Many feel corporate elites are out of touch with everyday Americans. The Chubb controversy shows that public pressure can force companies to reconsider their policies. In today's world, corporate decisions are under constant public scrutiny. Where you spend your money and what you demand from companies matters more than ever.